It's very true. I mean, Kelly, if you look at the shares, they've been on a downward trend now for about a year, down from their high 80%. So I think a lot of activists and a lot of potential buyers have probably already been eyeing this one. It'll be interesting to see now that the first activist is out of the gate calling for some pretty extreme measures, getting a new CEO and putting the company up for sale. It'll be interesting to see how the company responds.
Yeah, I guess Kohl's maybe a little bit less obvious to me, Dan, as a candidate, but retail always seems to garner these kinds of pressures.
Yeah, they do. And in part because the way to unlock value, or at least the theoretical way to unlock value, is often so obvious, right? You've got the brands, but you've also got the real estate, right? It's the old Eddie Lampert Sears argument.
Right.
That didn't work. But we're seeing it with others. We always see it with others. Because remember, Kohl's is really an off-mall department store. They're not sitting inside of Simon properties. They're generally in parking lots elsewhere. So there's a belief, at least, that there's always this value to unlock in it by kind of splitting up the assets.
The shares are up 33% today. Cara, do we call it a trend? I mean, is it just random if this is all kind of percolating at the same time?
It's interesting. I mean, what's interesting to me is that they're both at very different stages. Kohl's, of course, has had activists on its case for 2 years now. This is the second year in a row it's being targeted by multiple activists at once. And is this finally enough pressure to force some major changes there, whether it's, like Dan said, some transaction involving the real estate or a full sale or something else? Peloton, we're just at the beginning of the story. I feel like the company still has a chance in their earnings, which are weeks away here, to come up with some new strategy that's going to get the shareholder trust back. But they've been through that before, so we'll see how that goes.
And now I can't resist, Dan, asking, what do you think Peloton could or should or will do here?
Okay, and in full disclosure, I'm a user of Peloton as a customer, and like
You're biased.
The product. Bias. I admit my bias up front. It's pretty public bias. That said, look, I don't think John Foley is going to step down. There's a dual class share structure, so I don't think they're going to take a fire sale price. If some private equity firm or strategic comes and, offers a 10 or 20%, or maybe even 30, 40% premium, I think that earnings is going to be really important. I will say in the interim, though, because that's about a week and a half away, I am very surprised that they are not coming out somehow and telling their story a little bit more, not just in a letter, but in an interview, whether it be on CNBC or with me or somewhere else. February 8th is a lifetime away, and they're kind of letting other people define them in the interim.
Very interesting. We'll take that as a pitch. We welcome Peloton on anytime, talk about the story and the company. And Cara, finally, as we just kind of look through the narrative here and everything that's happened with it, should we expect Peloton itself to be a takeover target?
I mean, I think, like I said, the pressures on that stock, I think, have put it in focus for acquirers already. But what is really going to matter is, does the company have an alternative plan that will be just as compelling for shareholders as a sale? And we haven't yet heard from them. I think that's the important thing. But, one example last week, Activision selling to Microsoft, that came in a similar situation. Activision shares were under pressure. They got a soft approach from Microsoft saying, hey, we're here if you want to talk. I'm sure Peloton is getting similar approaches, or already has been for several months.
That's a great point. All right, we'll leave it there. Thank you both very much for joining me today.